Hello everybody and welcome to my weekly stock market watch list, where I'll cover any major market information that needs to be discussed that will help you navigate the markets. I'll also be going over my stock market watch lists each and every week on Sundays or the day before market opens. So if you find value in this content, make sure to subscribe, turn on the alert bell, leave a comment if you have any suggestions or want to hear anything about anything that I'm discussing here. Also, make sure to share this video if you find value and if you want other people to be aware of the markets. And I really appreciate your support. So without further ado, let's jump into some of the things that we're looking at this week. And I have timestamps in here so you can always go through and find exactly what you want to be looking for. The market right now is in a back and forth between corporate earnings and guidance and the economic conditions, considering a new Delta variant threatening global shutdowns around the world. A major thing that we're looking for this week is the fact that there's no more gamma pins in the S&P 500 from option expiration on Friday of last week. That means that there's going to be a lot more volatility this week, and with the selling that occurred on Thursday and Friday, I do anticipate that there will probably be a correction, though of course there's no certainties in the markets, so we will be prepared for rallies in big tech such as Amazon, Apple, Facebook, and Microsoft, as they have recently tested highs. And we'll look at those charts just briefly, but mainly looking at a few other stocks that have more asymmetric entries or higher reward to risk entries that we can potentially play this week. It should also be noted that 42% of all of the New York Stock Exchange stocks are just trading just above their 50-day moving averages. And so we're at a moment where big tech is really dragging the broader market along, and this is called market breadth. What we're looking for here is, if there is a sell-off in big tech, the broader markets should follow suit. SPY and QQQ would have a correction at that point, which would be good for us to have better entries on some longer term positions potentially. And again, regardless of the conditions that we're in, we are going to be watching for those reversals on those big tech names, because they could play some very big positions this week. So now let's hop into the charts and look at some of the things that we've discussed, as well as the stocks that I'm watching this week. So coming into this week, we are watching for a broader market correction because of the distribution that we saw on Thursday and Friday of last week. Again, we saw the SPY actually break its trend line pretty significantly, and if we look at the QQQ as well, you can see it even more vividly. Very, very strong breakdowns off trends. And with that being said, we also had lower volatility last week with option expiration for the month of July on Friday of last week. And so we can anticipate more volatility, and mixed in with the fact that we sold off so significantly, I do anticipate a correction like I said before. And with that also being said, we also have 42% of the stocks in the New York Stock Exchange, just 42% of them trading above their 50-day moving averages. And so that's really telling in the fact that the FAANG stocks are dragging the market higher. This is called market breadth, and we can discuss that a little bit more in detail in a later video. If you have questions on that, please do leave a comment, and I will answer those questions as well. So going into this week, we are being careful with those big tech names. The names like Facebook, Microsoft, Apple, and Amazon are all on watch. I won't even bother going over the charts because they all look pretty similar, and they all have a situation where they could either break down pretty significantly, or they could also break out towards their all-time highs that they have recently set. This trend in the broader market versus, like, let's say some smaller tech names, we can see that pretty clearly in ARK-K. There's been a lot more distribution in ARK-K ever since they started rallying back in the beginning of April, or sorry, at the beginning of May. And so right now they're curling over pretty significantly, and we could see a lot more selling in this area as well. So again, these would be good for put positions for more advanced traders. With the banking sector, we've had distribution ever since the beginning of June. We've seen a lot of selling, and this is with the fact that they are exceeding earning expectations this last week by about 26% overall in the broader aggregate view. And so again, their shares are nearly universally selling off, and they're also in favorable conditions for there to be a rally in these stocks. So we're going to continue to watch banks for reversal. I prefer Citigroup and Goldman Sachs, but we won't be looking at those charts. They all look relatively the same. Now let's dive into the actual trades that I'm thinking about taking besides technology. There are a couple techs in here, but they aren't the mega caps. But the first one is XOP. So XOP is oil exploration and production, and we have reached a very critical technical level where we could definitely see a reversal in oil. However, there is other implications such as OPEC and other factors that need to be considered. We won't even consider those for this trade unless there's more selling. Of course, past this zone, I will be entering for an asymmetric trade entry that could potentially reverse somewhere in this zone. So not necessarily right away on Monday, but potentially and most likely sometime this week. If there is a reversal in this zone, I will be playing this for a ride back to the all-time highs. We have seen substantial movements in this area driving inflation and commodity prices again, so this is going to be kind of a driver for the entire energy sector. Now the next stock that I'll be watching is the WPM, and this is a Wheaton Precious Metals, and this is going to be for a play on the rebound in precious metals that could potentially take place, and this is a relatively asymmetric entry as well. The TTM squeeze is showing that a larger move is likely coming here, and so with the accumulation that's occurred over the last few weeks, definitely going to be looking at this for a potential breakout around this area. Just above the $46 mark should be the nice resistance where we'll see a breakout. So we're going to be watching this zone, and that would also be a gap fill. And so pretty strong technical level. I would say a breakout above that could translate into a nice solid move. And going on from there, we have Snap. Now Snap is slightly oversold. It is nearing a 61.8 Fibonacci retracement level, and so we could see a solid reversal around this zone, around this area. I would like to see it flip before I take any position, especially with momentum on the TTM squeeze still pointing down. We could see a bit more selling before it catches a support, but with that support being caught, we could make a nice move back towards the $70 resistance above, and then if we make it past that, even past that, we could get 73.60 for the all-time high retest. Moving on to low and HG, they're looking pretty similar. If we flip between the charts, you could barely distinguish the two, and so we have both of them on the watch list. Having a little bit more relative volume is low. So low is kind of higher on the watch list, but again, these are pretty unpredictable. We are at an asymmetric entry level where we did just break out over this resistance, rejected that resistance, and if we bounce off of this, it could translate into a nice movement over, and then we have some pretty good room above that to run to the all-time highs. Especially if there's more selling in technology, we could see a translation to more consumer discretionary. And that really does it for this week. This video was a little bit more put together a little later than usual, and so didn't really get all of the details that I would have wanted to. But I think that this covers really the biggest issues or the biggest challenges we face this week, and going in with some solid trades that we can potentially enter. So gonna definitely be watching the XOP, the WPM, NVDA, Intel, Snapchat, Lowe's, Home Depot, and J&J. There's plenty of others. I'm sure you can see my other watch list in the video, and there's gonna be tons of different opportunities this week. So we're just gonna be careful, mindful of the potential sell-off. If there is a significant sell-off, playing puts on the downside is most likely what we will do in our Next Era Discord community, where we trade live and interact with our members every single day. So if that's something that interests you, I do encourage you to check out our $29 week pass. This is going to be some of the best education you've gotten in terms of stock market investing, especially for options. And I can say that because I personally have taken a lot of different educational courses, and this is one of the best resources that I have found in terms of educating people directly one-on-one. So if that's something that interests you, do consider that. Do give me a like, subscribe. This video might not have been my best one, but I promise they are very good. We've got lots of good details, and if you want some of the best trade setups, this is the place to go. So make sure to subscribe, turn on the alert bell, and like the video, comment, do all the stuff that you need to do, share the video with friends, and we'll see you next time.